Today is Monday, June the 24th, and we started with the McClellan oscillator edging its way from overbought down to neutral. Today's advancers versus decliners. Decliners were double the advancers, so that means we are making our way back again to the neutral line, which indicates money leaving the market. Now remember, we have coming up in July, around the middle of July, we're going to start earnings. So now not only do we have Fed decisions and China and Mexico and everything else, we also have to start thinking about how the market is going to predict second quarter earnings. Dow popped to open, very, very low relative volume, and tailed off for the rest of the day. NASDAQ, pretty much the same, the type of volume we've come to expect. And the S&P, similarly, the type of volume we've come to expect, a little bit on the low side. This looks more red than green, but we are heading towards a neutral position because on the 28th, I believe that's when China and Trump are meeting, and there's no great expectations for that. But if they do pull another one of these walking away from the table things, you should be prepared by having sold some of your stock, which I might do, but certainly I started today by selling the weekly 200 calls on Apple for over $2 per share. So that'll protect me from a 1% drop in Apple. Those are already profitable to the tune of about $300 or $400. So I'm going to watch it for the next couple of days. So let's look at the charts, starting with the S&P. Let's look at the day. Remember, we've got this quadruple top. And we're not able to break it. But we didn't pull back too much. What are we looking at in terms of other things? Chiku span is still way up there. On the weekly, we're probably not going to see too much of interest. Generally, we have a market that is cautious and is going to take a long time to move above the record highs that it's hit now. Friday, Thursday, May the 1st, October the 3rd, and September the 21st. That's a lot of times for hitting that value and not finding the volume necessary to go through it. Apple, gravestone kind of doji day, finished at the low of its trading range, getting support on the cloud. Chiku span is out in the open. We still have this gap up here. In terms of Apple on the weekly, Chiku span is out in the open. We've pulled back a little bit from last week's high, or last week's close. Flat cloud could possibly attract. China worries are going to be important for Apple, as they are for Caterpillar. Caterpillar has gotten off to a good start this week, up 0.6%. Where are we on the weekly? We've got the resistance coming up on the 200 for the Chiku span, which will put resistance at 136.67. We are above the 50s and above the 200 simple moving average, so that's good for price. Flat cloud will attract. We've got a gap up here. So the headwinds for Caterpillar are going to be 136.67, and then the bottom of this cloud, 139.77. Bad news if we get some bad news about China deal. Gold. Wow. I mean, this gold trade, which wasn't really a trade, I've been holding on to GDX for several years because it's been my play on gold, and everybody should have a bit of gold. Obviously, I was suffering badly at one point at 1830, but then we've had this steady increase up, and maybe we can even draw a trend line. Yeah, we can sort of draw a trend line here. So if we have to, if we're looking for downsides, we're going to look for downsides on that trend line, but that's a long way to go, and I won't be holding on to my gold that long. I have nice profit now, as opposed to having had 2 years of tax losses. Now I've got a profit in GDX, and I'm not going to mess around with it. Whirlpool, this is an important trend line, and it's just proving to be more and more important. It started back here with our first touch on July the 11th last year, then another touch February 25th, another touch April 23rd, May the 4th, and then several touches last week, and then finally a pretty decent rejection today. So we're keeping our eye on Whirlpool. I now have 600 shares, but I'm short this week's 140s and 142.50s. If I were to get out of the trade, I would be up $256. I'm willing to lose $300 or $400, maybe even $500 on this before getting out. I'm hoping by then we will have a break of that line. But again, it's another thing that's going to be dependent on China and what the market thinks the Fed is going to do with interest rates, so people can buy appliances again. Our last stock is going to be our chip play, and that's WDC. And we're above the 8 EMA now for the second day in a row. We had a bit of volume over the average on Friday, just average volume today. So there's some optimism with this chip stock, and again, it's going to be China dependent. Let's just throw a Fibonacci up here and see if any critical areas are being touched on. And from this point here down to this low, we came up and we had rejection at 78.2%. And we came almost down to zero, and we had some buyers. So our next resistance here is going to be $45, but before that, we're going to have the 50 EMA at 42.40 being resistance. So still long WDC, still don't have any short calls against them. I probably will put some on once it hits 45. It'll start to stutter there for a few days, I'm presuming. But let's keep an eye on it. Thank you. Hope you had a good day.